Sometimes what companies say is as important as what they do. To analyze how popular public companies were signaling to the street around digital, omni-channel, mobile, and e-commerce investments, we did an analysis of 28 annual reports across manufacturers, brands, multi-brand conglomerates, and retailers. While the 28 companies analyzed referenced the term digital on average 10 times across their annual report, not a single company referenced the term television at any point during their annual filings. So who is communicating digital leadership to the public markets? Around the term digital, no surprise here, luxury leader Burberry communicated the term digital 62 unique times across the course of their annual report. They failed to reference e-commerce once across their annual filings. Burberry's business, as it relates to e-commerce, is actually much smaller than other similarly sized brands and retailers. In terms of e-commerce, Walmart was the leader with 55 unique mentions of the term e-commerce across their annual filings. Walmart's business grew 30% in Q1 of 2014, besting Amazon for the first time in a decade. 50% of their e-commerce volume actually flows through click and collect, and they're making huge investments around how to turn their stores into warehouses. With the term online, Nordstrom was the leader, referencing online 55 times across their annual report. Nordstrom does 38% of their total revenue via e-commerce and is committed to leadership in an industry which has a huge burning platform, department stores. Walmart also led the way in terms of the number of mobile mentions across their annual filings. Walmart referenced the term mobile 12 unique times across their annual report. Mobile as a whole was underrepresented in annual reports, suggesting that investments are still maturing across the brands and retailers that were analyzed. Around the term omni-channel, Macy's was the leader with 26 unique mentions of the term across their 2013 annual filings. Macy's has been quite aggressive around turning their stores into warehouses and recently announced 500 of their brick-and-mortar locations would start shipping e-commerce purchases, providing for much more flexible inventory and pricing across their channels. Around the term multi-channel, Williams-Sonoma, a legendary catalog retailer, led the way. Williams-Sonoma also cited that 44% of their 2013 sales were done via e-commerce. So who are the losers? Grocery retailers Kroger and Safeway failed to mention the terms omni-channel, multi-channel, or e-commerce once across the course of their annual reports. Kroger referenced the term digital twice in regards to some of their digital couponing initiatives, and Safeway did not even tackle the topic in their annual filings. Another loser was luxury retailer Prada. Prada referenced digital twice in regards to 2010 site launches for both Prada.com and miumiu.com, signaling that they're incredibly late to the game. So why does it matter? When you look at the relationship between what companies are saying and who's over-communicating around digital, e-commerce, mobile, multi-channel, and omni-channel, and their performance in the marketplace, there's a distinct correlation. The correlation is highest around the 5-year returns and shows a high R-squared value. And particularly when you take out outliers, Under Armour, who's performing to the upside, and Adidas, who's performing to the downside, you can see a relationship between how companies communicate and how they perform.